Good evening, everyone. This is a Human Relations Commission. We're joined tonight by our presenters from Premier Bank of Adrian. This is the home ownership seminar, and we're looking forward to getting a lot of information. And we have time for you to ask questions after the presentation. So at this time, I'd like to turn it over to our host presenting our introduction to our speakers, Commissioner Ramos.
Hello, I'm of course Commissioner Ramos. I'm Joaquin Ramos, Vice Chair of the HRC, lifelong resident and of Adrian, and recently proud homeowner. Still kind of recent, I guess not really that recent anymore, but it still feels pretty new. So I spent a bit of time homeless, unsure where I would sleep with some individuals I thought would help me, being unwilling or unable to help me when I was homeless. During this time, I was, of course, still active in the community. So I sat here on the HRC, a different position at the time. And I was also running a campaign for city commission. So through the HRC, I helped facilitate what was then First Federal, now Premier, present their home ownership seminar. And it was an amazing program. Of course, after hearing such an amazing program, my mom and I thought that we would give it a try. Of course, by this time, we weren't particularly confident. We were hopeful, but weren't particularly confident due to other programs either telling us we don't qualify or we do qualify, but they aren't going to help us. There's certain prioritizations. However, Fran walked us right through the progress, helped us with the credit building program, helped us with the home ownership seminar. And we were fortunate enough that the process went by pretty fast, like many people, it's months longer, but it was very quick. Between Fran and our realtor, Nikki Nyack, we were able to look at numerous houses, not just one that we had to sell for. We actually got the choice of looking at numerous houses, even hearing about them the day they come on the market, thanks to our realtor. And pretty soon we were housed. Of course, there's still a lot of work to be done to turn a house into a home, but having the security of a roof over our head and a place to sleep does a lot, makes it a lot easier to push through other things and to rearrange your home anyways. So this program has done amazing things for me and others. And of course, I want to make sure that other people get to hear about it and get such a wonderful impact as well. So with that, I will welcome Fran Brandt from Premier Bank, the Vice President and Area Sales Manager. And of course, thank you for putting up with all the calls and messages and this long wait to finally do this. Thank you so much for coming. I turn it over to you.
My name is Fran Brandt. I'll tell you a little bit about myself and then I'll introduce you to one of my coworkers. Again, Fran Brandt. I work for Premier Bank, formerly known as Bank of Lenawee and First Federal Bank. I've been with the bank I'm going on my 28th year. Love it there. We went through all the name changes. We used to be located right over here. We started this program 10 years ago, maybe. So the program I'm going to talk to you about is called our Community Mortgage Program. But I'm going to turn it over to Bill and let him introduce himself and that. So both Bill and myself are mortgage originators, so we would both help you. I'm located in the Adrian office. He's in the Tecumseh office, but we both work together and can work out of any office.
So I'm Bill Van Tile. I work in the Tecumseh office. I do what Fran does. I'm a mortgage originator, and we work with the same program. So it just depends on where you are and what we can help you with, but it is a program that's available throughout the county. So we're looking forward to sharing it with everybody so that you guys can maybe take advantage of it, something maybe you can use. So
I'll walk you through this particular program is called our Community Mortgage Program. The program itself, we started out the same way we do any other program. You know, a lot of people think that they have to have 20% to buy a house, and that is not the case. This particular program, we will actually finance 100% of the sales price. So if you find something for 100,000 and we can qualify you for 100,000, you can borrow 100,000. So that is one of the big advantages of this program. We put it together to help people buy homes in low to moderate census tracts. So if the house is located in that area, or for low to moderate income folks. So it's a specialty program that we have out there that we have put together to help that type of population. The program itself, the big advantage again is that it is 100% financing. So you can borrow the 100% of the sales price. The other nice piece of that program is if you hear about closing costs or understand that, you know, you can borrow 100% of the sales price, but you still have costs associated with buying the property. So your closing costs are things like the appraisal fee, the title insurance, recording fees, setting up an escrow for your taxes and your homeowner's insurance. So even though we'll finance 100%, you may still need $3,000 or $4,000 for those other costs. Another feature of this program is we do allow the seller to contribute up to 6% of the sales price toward your closing costs. So that means if you make the offer high enough, say again, just using easy numbers, you're buying something for 100,000. If you say, okay, I'll give you 106, if you give me back 6,000 toward closing, that is allowed. And so really you could get into this program without any of your own funds on there. The other advantage of this program is if you've ever heard the term PMI insurance, private mortgage insurance, that is an insurance that you pay typically if you put less than 20% down when you buy a property. So, you know, if you're buying something for 100,000, you only put 5,000 down, you would carry this special insurance that insures banks, credit unions, mortgage companies of the first 20%. Because if we got a house back, we're going to take a big loss. So this company insures it, it's part of your payment. This particular program, you do not have PMI insurance. So what that means to you is that you'll qualify for a larger mortgage because we don't have to take money out for the PMI insurance. The escrow, I'm not sure if you've heard the term escrow before, but an escrow is an account that we set up to pay your property taxes and your homeowner's insurance. Whenever you go less than 20% down, we do escrow your taxes and insurance for you. So that means we're going to factor your taxes and insurance into your payment so that you make one payment to the bank. We pay your taxes and your insurance when they come due. So you're not having to come up with all that money at Christmas time or in the middle of summer vacation. Now your escrow, there's nothing tricky about that formula. We just take your taxes divided by 12 and your insurance divided by 12. So your payment can fluctuate year to year, but if it does, it's only because your taxes or your insurance changed. The other nice benefit of this loan is this is a fixed rate mortgage. It's will not change. The principal and interest part of your payment is fixed for the full term. And typically most people want to go the 30-year fixed rate. So if your payment changes year to year, it's just because your taxes and insurance are going to change a little bit. And we adjust that annually for you, but your house payment is fixed. So this is not a balloon where in 5 years you have to figure out how you're going to come up and pay the rest of it off, or it's not an adjustable, so you don't have that big payment shock. It's going to be a pretty consistent payment other than your taxes and insurance on it. So that's another nice feature of this program. When we qualify people for this type of a program, we do it just like we do any other type of loan that we have. Usually what we find that works best is we have you give us a call, we set up an appointment, we tell you what you need to bring in, and then we'll prep you for it. We'll go through everything, just like we did with theirs. We'll look at your income, we'll look at your credit, we'll figure a payment, see kind of how much. Sometimes people come in and say, how much do I qualify for? We can look at and figure out how much you qualify for, but usually we'll ask you, what are you comfortable with? Because sometimes we can qualify you for a much higher payment than what you're comfortable with. And we don't want to put you in a position where you're house poor, where you're just living to pay for the house. we want to make sure that you're comfortable and you're getting what you want. So we can also do that. We can figure out based on what you're willing or comfortable paying, what that would get you also. So, we do look at that. Now, sometimes if you're not in a position where you're ready to buy just yet, I tell people, don't get discouraged, come in, because we want to have you come in so we can talk about what you need to do so that we are ready, and some tips and tricks and prep you. Because if you don't come in and you wait 2 years, in 2 years, if there's something, you're still held up again. So we'd rather get you ready, get some counseling so you understand how this works. One of the things we do have you do with this program is we have you go online and do a first-time homebuyers class. I tell people it's not like some of the classes where it's a day-long thing. It's a 45-minute class, but it just gives you, an insight. It gives you things to think about. You go on, it's a free class. You just take it. It talks about home ownership, things that kind of preps you for that on there. Am I missing anything? Can you think of some things?
Talks about budgeting.
Budgeting.
That's part of that class too, is it goes through a budgeting process so people know how to adjust to a new payment. The other thing we look at too is payment shock, what you're paying now versus the new payment. So we try not to see that jump too much. We want to keep it affordable, make sure that you don't have that big jump. The other thing that I know Fran does and I do is when I'm qualifying somebody, I will not only look at the taxes on that property today, but they're going to adjust in the future because of the sale price. So we don't want someone to get in there and then a year later find that their taxes have jumped up without their knowing that they were coming. So we try to counsel that way too. So you can be prepared for that.
It's the other benefit of this program is the interest rate, like I said, is fixed, but we actually keep these loans in-house. So if you've ever heard the term Fannie Mae, Freddie Mac, those are investor loans. Now, our bank, we deal with both Fannie Mae and Freddie Mac and FHA and USDA and all of these others, but we service those loans. So even if you were doing what we call a conventional loan, you would always work with us, but the backer is Fannie Mae or Freddie Mac. The backer on this type of a loan is Premier Bank. This is our money that we're using to get out into the community to help people buy homes in all areas. It's not exclusive to the city of Adrian. When we first started the program, we found that there was a need. We have a government program called Rural Development or USDA. And in Lenawee County, the blackout area is the city of Adrian. So we figured there's a lot of houses in Adrian and a lot of need for mortgages in Adrian. So we originally put this program together to start with that. What can we do so that we can get people into houses in the city when USDA would not take those? So that's kind of how it started, but it is through all of our counties. We do this program in Lenawee County and Monroe County and Jackson County and Washtenaw County, all through Ohio. So it's not just a Lenawee County, and we don't have blackout areas. So there's not, any of the homes in any of the counties qualify as long as either you personally qualify based on your income, that it's got to fall into low to moderate income. And how that's determined is they look at, based on the county that you're purchasing in, it's 80% of the area median income. So as long as your income doesn't exceed that, and it's very generous. I think in Washtenaw County, it's like 78,000. In our area, it's in the high 40s. So it's not something like where you only can make $20,000 and you don't qualify. Or the other way is if the house itself is located in a low to moderate census tract. In that one, we just need the property address and we can plug it in. If that's the case, you can make 100,000 a year and go into this program. So it's either or on that, one or the other for that. But we do finance those, like I said, on all the in all the areas. This program is also geared towards single family home ownership. So it is for single family homes. However, we will do duplexes. So if you're looking at a 2-unit, but that one is going to require 10% down, 10% or 5%, 10%. Yeah, 10%. And it's got to be owner occupied. So this program is really meant to help people buy their primary residence. It's not for investment properties. It's not for investors. It's to help people get into a home. So, but we will do single family and that. It's not geared toward, it's single family stick built. So sometimes we'll get questions, will we finance a manufactured home in Hidden River? No, it's got to be on its real estate so that you have the title to the property on there.
The home has to be in good condition. It can't be a real rundown fixer upper. It's got to be in a decent livable condition. So that's important.
And by that too, it doesn't, I explain that a lot when I'm meeting with people. What we're considering good condition is as long as the appraiser doesn't know that there's a real problem. I mean, you could walk into the house and go, oh boy, this hasn't been updated since 1960. But if everything is working and it's got floor covering and the cabinets are there and the counters and it's got your typical bathrooms and things, that's fine. As long as it's in working order and there's no gaping holes, or you don't walk into rooms and you can tell that the ceiling's about ready to fall because there's water damage in that. So it's not looking at necessarily the cosmetic, it's looking at the structure and making sure everything is in there. So if you're looking at houses, and I kind of tell people, as you walk into it, if you walk into a home and you see that, wow, this roof is really, really bad, or something, else is going on, then right then you kind of know that that's probably not going to be the best house. Let's look at something different. If nothing blaring stands out, then it may not be a big issue. We really rely on the appraiser to tell us. And the appraiser is not a home inspector. I mean, they're going to turn the water on and make sure it runs. They're going to turn the furnace on, but unless it stands out to them also, then it's not a big issue. So the big things that we find that it's kind of hard to overcome are like roof and foundation issues. Those, if you've got that's can be big money, and that's a little harder to overcome. If it's something where you go in and it's like, okay, the bedroom closet is missing a piece of trim, not a big deal. But if there's major stuff on there, and they do want, again, typical floor covering down, cabinets, counters, that type of thing on there. Questions? Any questions on this particular program that you can think of? Our pre-approvals too, just in case you're wondering, it's no cost. Sometimes people will ask us, how much does it cost to come in and get pre-approved? There's no fees. We charge you no fees until you're ready to purchase or ready to move forward and actually have us start financing the house. And at that point, that's where you have appraisals and things. But again, if you write your offer the correct way, that may not come out of your pocket. So we look at that. And that's one of the things that when you meet with Bill and I, we'll walk you through that again. We'll explain what some of this means, because if you know that you want the seller to help you pay closing costs, you want to make your offer that way. So we'll remind you that's how you do it, because once you have a signed purchase agreement, that's when we're ready to start, but it's hard to go back to them later and say, oh, I forgot, I need you to give me that money. So we want to make sure you're prepared when you meet with the realtor. And we'll explain different things that you're going to see on purchase agreements, like tax prorations and what those mean. So we walk you through the whole process on that.
I had a question.
Yeah.
Is it open to anyone, or is it exclusively first-time home buyers?
No,
Or
that's a great question. I'm glad you asked that, because we call it our first-time home buyers program, but you do not have to be a first-time home owner. As long as you have not owned a home or real estate in the last 3 years. So you could go into it. So that happens. And we've had multiple people where maybe they owned a house, they moved out of the area, they came here, they've been renting for the last 5 years, they qualify for this program. So you do not have to be a first-time home owner, just not owning something in the last 3 years. And I'm glad you asked that, because I didn't think to do that. In the credit qualifying, we'll help you through that process too. That's the other benefit of this one, which I should point out. Usually when we're dealing with investor loans, they want to see that you've had a few different accounts open, credit cards, car loans, something, but they want typically 3 or so trade lines, what we call. This one, you don't have to have that. We can do one of two things. As long as you have at least one account that you've had out there for 12 full months. So like if you have just a Kohl's credit card and you've had it for 12 months and no late payments. And what we call late payments are 30 days or more past due. I tell people all the time, maybe your Kohl's card is due on the 5th. If you paid on the 10th, maybe you got hit with a late charge, but it's not hitting your credit report till you hit 30 days. So we just want a 30 or a 12-month history of on-time credit on one trade line. Or if you've had nothing, you just have nothing out there, then we can go to alternative credit and we can use your rent. As long as it's been on time for 12 months, we can use your gas bill, your electric bill, and we build like what we call a non-traditional credit report on that.
So phones, car insurance, any of those things will work.
So we're mainly looking at, how has your credit been for the last 12 months? Can't have any foreclosures though. And the bankruptcy rule, we just recently changed that. In the past, you couldn't have any bankruptcies. Now they're going to follow more of the conventional. As long as the bankruptcy has been done, discharged, and there's nothing outstanding on it for the last 4 years, then we can look at those now. Any other questions you can think of?
How do we get a hold of you guys?
I'm sorry, what?
How do we get a hold of you? Like phone number?
Actually, we brought some business cards with our phone numbers and we did bring some sheets so that you can kind of see. It just hit some of the bullet points on there. So yep, we've got some cards up here and then just call, and we both share the same assistant. You guys know Judy Drews. She's excellent. So I always tell people, if we don't answer and she answers, don't be afraid to talk to her. She has our schedules. So yep, she's wonderful. So she will set up a time, she can look at where we're at. She knows where we're at more than we know where we're at sometimes. So she's great. So she can help that out. And both of our phones will go to her if we're not available. Any others? Well, I want to just briefly talk about another program. We had another coworker, and I don't know if maybe she didn't realize which building we were in, but she was going to be here about 6. So I think she may have gotten lost. So this is a program. It's not necessarily for, it's not a new home buyers program, but it's for people that own a home currently. And it's called our Better Together Home Improvement Loan. And that is another loan that we've put together to help people do required or necessary improvements, even if they don't have equity in their house. So what may happen, you could buy this house and finance 100% and say a year from now, your furnace goes out. Well, you have not paid it down much. You don't have enough equity to go out and get a traditional home equity loan or something like that. So we've put together a program to help, and it's kind of along the same lines for low to moderate income, but we'll do them for others too. It just is a little higher rate. It's a very low rate. We do up to 5 to 7 years still. Okay. And I apologize because Bill and I used to do that one, but they just shifted it over. So for the last 1.5 years, so changes, that's why I was hoping she'd be here. But the program itself still works the same way. And it's for those type of improvements. And it's at a low fixed rate. It'll help you get, necessary repairs. We do not get an appraisal done. So it's okay if there's an issue with the house, where typically if you're doing a true home equity loan, first you need equity in the house to be able to do it. Second, they're going to get an appraisal done. So if there's problems where you can't get the loan, the house is not in a condition where you can get it, that's a problem. This loan does not. We call it a Better Together Home Improvement Loan, but it's an unsecured loan. We're just doing it to help you get the repairs done that you need to. Any questions on that one?
Yes, I'd like to know what is the percentage of the loan for that current owners, if they take out a loan.
Okay.
So what would be the percentage that they would be
And that's
paying?
where we needed Michelle, because it was at, I don't want to guess wrong, but I
Don't-
want to say it was
okay.
about 5. It's not, it is nothing like what an unsecured loan would typically be. A
Okay.
typical unsecured loan would run something like 12 or 13% for
Mhm.
2 years. No,
Mhm.
it is
Mhm.
not. It was, I believe, 5%. And depending on which term you go, 5 years or 7 years, but it's not anywhere near 10%. I mean, it's a lower interest rate.
Okay.
Yeah, and I apologize. I can have her touch base with you too to get you some of that. We'll get some more information.
Another question that I had, how long is the process for the first loan?
The first loan?
Mhm.
Actually, it's just like any conventional loan. So we usually tell people, if you come in, you're ready to go, we've already pre-qualified you, you find a house and now you have a purchase agreement, then I usually tell people plan on 30 to maybe 45 days. We're really kind of at the mercy of the appraisers.
Mhm.
When you bring the stuff into us, as long as we have everything, we're underwriting it in literally a couple days, just waiting for those things to come back. So this is not like a government program where we have extra steps. It's just as long as it takes us to get appraisals back, or if we're missing something, like if you needed to get us something, but you've taken 3 weeks to get it. I call a lot, so I'll remind you, you won't be 3 weeks, but that would be the only thing. So usually 30 to 45 days. I have a couple loans this month that I've closed in 2.5 weeks. So it just depends on how fast the appraiser can get out there and get into the property. And if you bring everything we need. And typically what we need, just so you kind of know what we're looking at when we do a pre-approval or a purchase, is usually we have you bring your income documentation. So what that would include would be like a pay stub, your last 2 years tax returns with your W-2s or any 1099s or attachments. So if you're retired, then we would be looking at your Social Security awards letter, and then your 1099s from the Social Security, or like your pension, 1099s. If you are employed, then we're looking at your pay stub and your W-2s along with your tax returns for that. If you are self-employed and you have a separate business, then we do also need the business returns for the last 2 years. So it's usually two tax returns. Pay stubs for this program, we usually need 30 days of pay stubs. So if you're paid bi-weekly, we would get your last 3. If you're paid weekly, typically it's going to be your last 5, so that we've got at least the 30 days on it. And then for bank accounts, we usually look at your last 2 months bank statements on there. So 2 months. And then if your pay is direct deposit, we still need a pay stub. So sometimes people go, okay, that's what I make. We're using your gross income, not your take home. So if your paycheck is direct deposited, that's after all of your deductions and things. And that we can use the higher amount before any of that's taken out. So that's why we need the pay stubs. And we have to be able to look at what's your year to date, because if you're a full-time employee that works at least 40 hours a week, you should be at a certain point based on what time of the year it is. If you're not, then we just need to explain, hey, did you have a surgery, or why is it not matching on that? And then, like I said, 2 months bank statements. Complete, yeah. And the bank statements, yeah, Bill just said complete, because we always tell people we need 2 months with all the numbered pages. So if your bank statement says page 1 of 5, even though page 5 might be your reconciliation page or blank, we need all 5 pages. Because a lot of times they'll just bring in a
Leave
print
that
screen
one.
from their online. Yeah, and they go, well, this has the balance in there, but we have to look at the history. And the reason we're looking at that is our underwriters, they have to see the deposits and things. Are they consistent? You know, if your payroll's direct deposit, then it will usually say L&W and your payroll. We don't need anything there. But if all of a sudden your balance is $1,000 in your checking account and you have a $950 deposit and it just says deposit, we have to show where did that come from? Because we've got to be able to show that you didn't go out and take a cash advance on a credit card or things like that. So we just have to prove it. So cash is very difficult. We can't prove cash. So I usually tell people when you're preparing to buy a house, start putting things into accounts or something we can track. It doesn't have to be a checking or savings. It could be a CD, but we're always going to look at the last 2 months. So we want to show that it's been in there. And the other thing I think I should mention is, you know, I mentioned your closing costs and that you can ask the seller to give you a seller concession or kickback of up to 6% of the sales price. If the seller won't do that, the other thing that is allowed is gift funds. So if you have a family member, mom, dad, aunt, uncle, brother, sister, you know, that says, I want to help you get this house, I will gift you $3,000. That is allowed. We just have them sign a gift letter saying they gave it to you. That's where it came from. We prove, you know, we make a copy of the check they gave you and a copy of your deposit into your account. So that is a qualified source of funds that we can use. But back to your Nerva.
Well, I have another question.
Sure.
And I'd like to know about property that the bank may own.
Sure.
So can you give us a insight on, you know, if you own that property, how do you process that? Do you give them a customer information about you have some homes available, they'd like to take a look at it? You know, because that's one of the things I'd like to see sometimes is
Sure.
with other real estate.
Mhm.
And do you work with realtors
Yes.
as well? Okay.
So fortunately, we don't have a lot of foreclosures. So our bank right now, to my knowledge in this area, the last I knew, we only had a commercial property. So we just don't have the houses. Now, not because sometimes there's not foreclosures, but just so you understand, I mentioned the term Fannie Mae and Freddie Mac, the investors. If we did a loan that was a conventional loan and it was say a Fannie Mae loan, we service it. So your coupons, everything says Premier Bank. But if that house got foreclosed on, we follow it through the whole process. We do, the attorneys handle all of that. But once it's gone beyond sheriff's sale and turned over completely, it's Fannie Mae's house. It's not Premier Bank's house. The only foreclosures that are our foreclosures would be like these types of loans. If for some reason we got one of them back, that's an in-house, our loan, we would have something like that. But any of these others, when we get to that process, it's not our house to sell. So we don't have any decisions, it's theirs. Now, I will tell you, typically the investors use a realtor though. So the one in our area that I know a lot of them, you know, the foreclosures go through is the Goddard Company. So usually when someone calls me and says, hey, can you tell me about any foreclosures in the area? Do you have any that's listed? Then I usually direct them to Goddard just because I know they have a lot of those contracts with a lot of them. Not that any other real estate office couldn't have some, but typically, you know, we see a lot run through that office. And those are okay to purchase as long as they're in okay condition. So years ago, when we used to get a foreclosure, someone would call and say, hey, I'm looking at this foreclosure, you know, on such and such street. To be honest, we'd all go, oh gosh, why me? Yeah, because they were bad. They were bad. You just knew, you know, back in the day, a foreclosure was just going to be a hot mess. Yeah, it was destroyed. It was not, you know, it was not going to go conventional for that. But that has not been the case over the last many, many years. I've said back when things hit rock bottom in 2008, I said what we experienced in our area was bad things happening to good people. Marilette's closed. We have, people, both husband and wife work there. You've got two people that lost their jobs that may have been there 20 years and making a great income. And now they're expected to find another job at half the income that they were making. That to me is bad things happening to good people. They paid fine up until that point. That's kind of out of their control. We weren't one of those lenders. And even in our area, there weren't many of those lenders that did that other type of financing, like what you would hear stories about in California or places like that. At least we didn't experience that a lot. Things happen, death, divorce, there's a number of reasons why, but we didn't have that. So now a lot of them, when we had foreclosures or houses were coming back, what we saw, or what I saw, was a lot of investors, they would let their rental properties come back and keep their home because they couldn't get people to pay rent. They were losing those. Or people that I can recall a couple of them coming in and saying, we're moving down to Texas because I'm a builder and they're building down there, but they're not building up here. Those people would come in and beg us to take their keys, and the houses were immaculate. I mean, it was just like, I just want to turn this over, those properties are fine. I mean, that's fine to finance those. So we're not experiencing that like what we used to, the houses that were an absolute mess. Not that they couldn't be. I mean, I'm sure there's some out there, but if they're missing things or torn up like that, it's going to be tough to finance. A lot of those you'll know because when you look at the listings, it might say cash only. If you see something that's cash only, they know that no one's going to finance it conventional. So what that's going to take is probably an investor to buy it, fix it back up, and then either resell it or something. So they aren't, they know that a bank's going to have a hard time financing those. Now I will tell you on foreclosures, even the nice ones, it's very common for, depending on how long it's been foreclosed on, for those companies that do have the house back, they may turn off utilities and things and winterize and that. When it comes time to finance them, they need to flick them back on because we got to make sure water runs, you can flush toilets, things like that. Yeah, because we've got I had one that someone was buying a foreclosure, and when they turn the beautiful house, when they turned the water on, they discovered that the person that lost it had cut all of the U's out of underneath the sinks. So the water came on and water just went through every place they had. And it wasn't something that they went underneath and looked at under every sink. You just assume that someone wouldn't do that, but they do. So we have to show that things are working because we don't want to put you in a position where you just bought a house and now you have $10,000 to try to get the plumbing back. So you do that. So, yep.
Another question, have a cutoff age for either
Loans?
anyone?
Nope. The minimum age is 18 because you've got to legally be able to sign a legal binding contract. So you have to be at least 18, but I finance all the time. I can tell you people will come in there, I think I had one 91 and they'll take a 30-year fixed, and that's fine. And I've had people come and go, honey, you aren't going to give that to me for 30 years. Sure we are. Our collateral is the house, not the person. You can be 25 and get hit by a car walking out on the street. So no, there's no cutoff age as long as you qualify income-wise, credit-wise, and you're at least legal age to sign a legal document. You can be whatever age you'd like. So, yep.
Great.
Mhm. And for either of those loans. Mhm.
That's very good to know.
Mhm. Others you guys could think of?
Well, if we have any other questions coming from our audience online, if you'd like to raise your hand and let us know that you have a question, we can beep you in.
They're like, yeah, I wouldn't know.
Any other public comment with those that are present? if you step up to the podium and give us your name, your address, and you can just ask any question you'd like to concerning this housing. Okay, I have a hand. Let's do the hand. Is that voice? All right.
Hello, everyone. I'm sorry, it took me a minute to find the hand raising button. And now I'm trying to figure out how to lower the hand. Okay, here we go.
Okay, we know you now.
Yeah, I want to know, typically with going through this process, how long is the process from a person walking into the facility to inquire to actually being approved for the loan? And then typically, how long is it from the loan being approved to them actually being able to settle on the house?
Okay, so the first part of it, the pre-approval stage, usually when you make the appointment, if you come in with all the documents, we can pretty much tell you then.
Okay.
You're approved before you leave. I usually tell people, but I'm a talker, so. And I explain I explain everything. So I usually say, plan on about an hour and a half hour for the appointment, depending on what questions they may have, because especially when we're dealing with first-time home buyers, we want to make sure they understand all the terminology, what they're going to see on a purchase agreement. So that's the pre-approval stage. If there is something where it's like you're kind of borderline, we're not sure, then we have our underwriters will submit that information right over to them just to say, I want you to take another peek at this. Does everything appear okay to you? And so it's not something that you're waiting a week to find out, are you pre-approved? Most people, when they walk out the door, they either know, yep, we're pre-approved, or this is what we need to work on. And as far as if there is something, what they need to work on, it just depends on what that is. So example might be how he said we need at least one account with a 12-month history. I had one the other day where he had 9 months on a credit card. He only had one credit card. So we kind of just stalled it, waited the 3 months, and then picked it back up and we were ready to go. So that was we just knew we had to wait 3 months for 3 more payments to post on his card. So that's at the pre-approval. The application stage, once you find a house and there's a signed accepted offer, that's where I was saying it's about 30 to 45 days, depending on how long it takes us to get the appraisal. Sometimes we close sooner, sometimes it's a little longer. And one of the things that's kind of extended that time frame is, I'm not sure if you're aware of, I keep calling it the new government rules, but it's actually been there probably 3.5 or 4 years now. But it's the TRID Act, where in the past, when we were ready to close, we would say, okay, we're ready to close, and we can close 2 days later. Now we are required by law to give you a copy of the final closing disclosure. And that's the document that breaks everything down. It shows you the amount, the rate, the payment, the terms, the costs, 3 business days prior to closing. So we have to prove we gave that to you, but we have to give the title company time to get it ready. So usually now what used to be a 2-day closing we have to schedule it. We're ready to close, but we're scheduling it 6 or 7 days later just to meet those guidelines. So that's not a bad thing, because it does give you time to look over everything. So, because you hear those horror stories, at least I've heard them from people that go through these crazy mortgage companies. They get to the closing and they go, this isn't the rate I was told, or this isn't the payment I expected. And you're sitting there, pressure on. If you don't sign, you don't get the house. It gives you time to review documents, make sure everything looks good. If there's something that needs to be fixed, it can be fixed before you're sitting at the closing table. So that's kind of added the week on to what we used to, our closing time frame.
So as an example, if the file got cleared to close.
Thank
today,
you.
We could have somebody sign their closing disclosure Thursday. And then starts the clock. So we count Friday, we do count Saturday. They could close Monday, would be the soonest they could close, Monday or after, just to give you a timeline on that.
Thank you.
I would also like to point out for D'Angelo, that it also depends upon how long it takes to find the house that you're happy with. Like, we had to go through a few, and some of them were definitely more desirable than others. So that might add a little bit of time.
Yeah, it's all assuming you have a house. Yeah, that you have made an accepted or have an accepted offer on a house. Because especially in this market right now, it's such a low inventory, hot market. So, people, it's tough for them to find things right now. And when they do, they got to jump on it quickly because they're competing against 10 other people. Mhm.
Any other questions from our online video or individuals here?
Hi, my name's Kara Snyder and I live over on Winter Street. And I don't have a question, but I have gone through both of these programs. And this bank is great. Fran was who I worked with. She was wonderful. I had never done anything like this before. I was completely clueless. And as usual, if anybody knows me, anxious and terrified. And Fran was fabulous, absolutely fabulous. It was so easy with Fran holding my hand and telling me what I needed to do. So it's a wonderful program and I'm really glad that they offer it.
Thank you. Thank you very much.
Thank you for your comments. Are there any other comments that we'd like to hear from this time?
Hi, my name is Joshua Frank. I live on 141.5 South Main Street. And I'm curious with the requirements for a loan. You had mentioned that as long as you haven't owned property in the past 3 years, you can qualify. What if you previously owned property under a land contract?
If you don't have, I mean, did the land contract dissolve or do you still own it? on
No,
that contract?
it dissolved like 10 years ago.
Oh, then that's fine.
Excellent.
Yeah, that's fine.
All right, thank you.
That's a good one. Yep. Mhm.
That's a very good question. I'd like to ask another question, and it would be both of the loans. And that's the inspection on the house. Because now I know the inspections can create some problems because you were talking a little bit about the
Mhm.
condition of the roofs or other places. So where is that cost coming from for the owner, or is it coming to the
The
lender?
cost of repairs or,
Yeah, if you say that
Okay.
it needs to be repaired by,
sure.
who is going to
So
pay that
The
cost?
first is that second loan. The
Both
home
loans,
improvement
either
loan
one.
is an unsecured loan. So we're not even.
We're
getting an
not even in
appraisal.
that one.
So there's no
Okay.
inspection. So that
Okay.
one you wouldn't have to worry about. The new purchase loan, it could. And it depends. So when that comes back, that's either what a lot of people do is they may go back to the seller and they show them the appraisal, that, hey, this is required, and they try to renegotiate an offer. So where they either get the seller to pay it or fix it prior to, and to be honest, we have pretty good luck with that, depending on what it is. Some sellers, if they know, again, like those cash things that they're like, it's being sold as is, we aren't going to do it, then you're not contractually held to that. You could back out. You could just say, okay, I'm not going to buy the house, because your purchase agreement, when you read it, it's going to say contingent on financing and an appraisal. So if you can't get financing because the appraisal is bad, then you don't have to go through with it. So you just try to negotiate with them. And depending on what it is, if it's something very, very minor, again, a lot of times the seller's like, yeah, I'll fix that. And then we just send the appraiser back out to show it's been done. If it's something major, you probably don't want that house anyways, what I mean? And once they are made aware of that, that seller has to disclose that going forward. So when you buy a house, you're going to do a purchase agreement, and they're also going to supply you with what they call a seller's disclosure. And in that seller's disclosure, it asks all sorts of questions like, has there been water in the basement, just different things. And at the time that they were selling it, they may not have known about it. But once it's brought to their attention, like if they find mold or something like that, they have to disclose that. So chances are, especially if they have a realtor that works well, that realtor is going to say, anyone else is going to want this fixed too. So that's how I usually have pretty good luck.
Okay, I'd like to go to a section where you said 2 years of tax income.
Mhm.
Well, we've been in a pandemic for at least 2 years, and some people have been laid off.
Mhm.
Some people are in a situation where the money wasn't flowing.
Mhm.
Exactly right.
Mhm.
Do you work with individuals that, or tell us a little bit about maybe an experience that somebody has had that
Sure.
could be helped?
Yep, we know that. I mean, so our 2-year history is we just want to see the continuation of employment. So you don't have to be at that same employer for 2 years. You don't have to be, we're going to look at it. You can't be laid off at the time you apply. I mean, so we have to show you're back working. But if we can explain it, so that's why we look at the W-2s, because if you should have made 35,000 and your W-2, based on what your hourly rate is, and your W-2 shows you made 18,000, then we're going to question, okay, it looks like it's different. And that's where you're going to say, we were shut down for COVID from, March 29th to, September 1st. We can explain that. So that is fine. We're to put that in the explanation because they just want to see that the income we're using now is, I want to say continue, but we've got stable. That's the word I was looking for, stable income. So we're not penalizing you for things that happened over COVID. We just have to show a 2-year history. Now, if you are self-employed or a commission employee, something like that, then it gets a little trickier because with those, we're typically required to average the last 2 years. So it could bring that down. But if you're a regular hourly employee that now you're back to 40 hours or 36 hours and what's considered full-time, as long as your pay stubs now make sense from the time you've been back working, then we're okay. The other thing is you may be a new employee. So I just spoke right before we came here. I just spoke with someone that is graduating from college and they're an RN and they're going to start their job. So of course we don't have a 2-year history. We might have a history of, that maybe they worked at Hungry Howie's during college. We're not going to penalize them either because now we're going to show it just got to make sense. They were in school, they graduated. So sometimes we get a copy of their diploma and now they have their job and we're going to use their new contract. As long as they started it and it tells us specifics that they're 36 hours. I just use 36 because a lot of nurses are 36 hours, but 36 or 40 hours, we're going to use their new income, not the past income. So does that make sense? So we want a history to show in there the continuation, but you don't have to be at that same employer necessarily.
How about,
Please, just come up to the podium. I appreciate it. Give us your name and then you
Mary
can ask.
Burton.
All right.
My question is, what about people who are on like disability or something? Because even through the pandemic, we still got our checks. We still made our rent, our electric, whatever, all those bills.
And we have a lot of people on disability.
So they are qualifiable too.
As long as it's considered permanent disability, we can use it. If it's a temporary where there's a shut off date or something. So an example of temporary might be, well, I had a surgery, I'm on disability for 6 weeks, we might have to show their back, but like Social Security disability, permanent, we'll use 100%.
Okay, thank you.
You're welcome.
That was a very good question.
Yeah, that's a good one. I didn't.
Yeah,
We
yeah.
have a lot of that.
Yeah.
I was going to ask that question.
All right. Do we have any more questions for our guest speaker? Let's give them a hand. All right. We see your hand. We see your hand online. You can speak.
Okay, hello. I don't know, my computer sounding weird, but can you guys hear me? Okay.
Yes.
All right. Okay. If a person is in a land contract, can a person come to apply for a loan to pay off that land contract?
Not under this program, but we do refinance out of land contracts. So in a case like that, It would be a refinance, not a purchase. And as long as that person has owned the property on land contract for 12 months and we can document 12 months payment. So keep in mind, I tell people that know they're going to go into a land contract or in that situation, don't pay with cash. Write a check, do something that we can prove it's coming out of your account, every month for 12 months. Then it's considered a refinance. And when you're ready to finance it, we can base everything on the new appraised value. So you've got equity, hopefully equity that way. So example is if you owe 50,000 on your land contract, but you've had it over a year and we can document the payments and it now appraises at 60,000, you've got your down payment. So you don't need a down payment. And in a lot of cases, there's room to roll in closing costs. We can go up to 95% of the value. But we can't give cash out. So when we refinance land contracts, we're only allowed to refinance the balance plus costs. Because sometimes people will come in that have had them for 5 years and they want to pay off their credit cards or do some other stuff. And that's just part of the land contract rules. We can only pay off the balance.
And when we say proof of payments, we're going to ask for copies of the canceled checks, the last 12. Because
I'm sorry, I can't hear you.
I apologize. Can you hear me now? So when we say verification of payments, we're going to ask for 12 canceled checks, the most recent 12 consecutive canceled checks to show that you've been making that payment. That used to be all we need to do is send the land contract holder a form saying, hey, how are they paying? Well, if you're way behind, the land contract holder is going to say, they're ahead, they're great. But now we have to take the extra step and actually document that with canceled checks.
Well, we'll try again. If there's no other questions in our cyber land, then we're going to ask those are here if you have any other questions. If not, we're opening it up to our commissioners for questions or comments.
Of course, I have to comment that this was an amazing program. It worked well for me and my mom. And like mentioned before, we got a choice of houses. We looked at numerous different houses before we chose the one that we were happiest with. It was a great experience. Fran put up with holding our hands, walking us through, and the constant messages. So greatly appreciative. Thank you so much, Fran, for bringing the homeownership seminar and for all the amazing work you've done with it.
Thank you.
Yeah, I just wanted to thank you for being open to coming here and talking and letting us record it, because I know a lot of us, we do share that goes on YouTube, and then we share it, and then this information goes out to the people that weren't able to come today because they were working or whatever. And I think this is a really important program that I'm really excited to have in our community. So thank you.
Thank you.
Yeah.
I also would like to express my thanks to both of you, Fran and Bill, for the wonderful work you do for this community. It's so important and people are in need. And we're just very grateful for your talent and skill that you lend to the community.
Thank you very much. Thank you.
All right, I guess I'm the last one to speak on this. And we just want to say how much we appreciate not only you coming, but you brought food along. So for those that are here, you will be allowed to have some food before you go. We want to thank you and also ask you to set aside some time. We're going to try to pull you back in maybe for a pre-meeting time that we can bring you back and with some more questions, get some more answers, and you don't have to buy pizza this time. Although
We're happy to do
we
it.
don't mind having it at our meeting, do we? But we just want to say thank you to Premier Bank for allowing you all to be with us and consistently with us. And I do believe somebody else is going to get a house. As we know from the last time we did it, which is almost 3 years ago now, we did have people that inquired more about it. and also that we're able to get into homes, because I do have a couple people from my church that did get loans.
Good.
So we do appreciate that so
You're
much.
very welcome.
And do you have any questions for us?
Nope, I don't think so. We brought some cards. If you think of questions, feel free to call any of us at any time. As you want us back, or if you guys compile lists of questions and you want to email them over, we can, come back and talk you through them, answer them, whatever's easier for you. So,
And
We're
you have
happy to-
brought along with you some,
yes, we've got some notepads if you want to write some notes down on there, and like I said, some business cards and some flyers. The flyer just hits briefly on a couple of the things, but they're there. And I apologize, my picture is quite old, but it looks much better. So,
okay. Well, that's great. And again, thank you so much. Let's give them a hand. Wonderful presentation. At this time, we'd like to close our home ownership seminar for this evening. We'd like to thank all of those that are online and those that are present in the chambers. And we'll close out at this time. Thank you.